Joining me in this conversation, my co-host Kshitij Anand. He's editor markets and finance at ET Markets. Good evening, Kshitij, and thank you for joining us. And our guest, of course, is Ashish Kyal, founder of Wave Strategy Advisor. He has a vast experience in capital markets and has worked with leading investment banks like Lehman Brothers, Nomura Holdings, etc. Ashish is known for his expertise on intermarket analysis, Elliott waves, and time cycles. Thank you so much, Ashish, for joining in and agreeing to do this.
Pleasure is all mine. Thank you very much for inviting me up.
Awesome. So, Ashish, as the topic suggests, it's all about trading psychology. Want to keep it really very, very, very basic and try and understand from you that why is trading psychology so important and why is it worth spending time to develop and refine it in your trading career? If I'm an entry level or an intermediate trader, I already have my system and everything in process, then how does trading psychology come in the picture in this case?
Yes, absolutely. See, one very important aspect as a trader, the most important aspect that you have to focus on is having the right mindset. And not only for trading, whether you are carrying out any kind of business, or is it an exam, or is it any aspect of life that you look at it, the most efficient way in which you will perform is only the time when you are joyful, when you are trading, when your mindset is right. So if you are not in the right mindset, the decision making ability gets highly compromised. And trading is such a place where you have to be very quick, very fast, very efficient in terms of making a decision. Having said that, one very important aspect, people relate to trading as something like a gambling. You just go, you try to bet on something, it goes up and you make money, and then you are out of it. But if you treat trading like a gambling, you are only going to be here for a very limited time, and that can be as limited as one day, and you will be out of the game. But if you treat it like any other business, which involves a lot of thought process, a lot of tweaking, lot of there is a gestation period, of course. So then you are going to survive in these markets over the period of years and years. So I've been in this market for nearly around 15, 18 years now, and I have seen the cycles, the way it has behaved all the way on the downside. The crisis of 2007, 2008, where I even lost my job in Lehman Brothers. Lehman Brothers filed for bankruptcy, and then from there, Nomura Holdings took over, and things again started. Then I started on my own, working with the firm is Wave Strategy Advisors. So in that entire process, I realized that if you do not have that mindset as a trader, as an investor, for you, the markets are not going to give you anything. So trading psychology is very important, even if you have systems in place. Why? Because the systems that you are forming is purely dependent on what you are giving as an input to the system. So if you have a garbage in, the garbage out process will happen. So you have to tweak. The systems are not lethal or foolproof. Like people assume that if there is a system, you just have to mint money like a money making machine. It's not that way. A system is going to function for a specific cycle, and then it has to be tweaked. It has to be relooked at, and when things are not going the way it is expected to be, you have to be patient also at that point of time. You don't really have to jump in again and again trying to change something which is working just because there is a drawdown. You try to tweak the system. So these are the phases when things are not falling the way you expect it to be. You need to be cool, you need to be calm, you need to be very less anxious, because if you get anxious enough, you will do something very stupid. For example, if your system generates a signal that you have to go and buy a price right now, and you got into the trade, but suppose if in just 5 minutes of time your system throws out another signal, okay, now let's exit. Now you will start thinking, if it's not automated, you will start thinking whether I should exit now. System can go wrong. Your entire thought process will change at that point of time. So when you are testing it, it looks awesome. But when you are actually playing it, a lot of trading psychology or the mindset comes into play. So I would say that if for a trader, it is 30% trading psychology, 30% of the time it is your systems, your methods that will work. Remaining 35%, it is your risk management, money management, that is very, very crucial. And remaining 3 to 5% luck, which is required in every aspect of life.
Ashish, in that case, do you think that emotions come into play even in case of system traders or traders who follow an algorithm? Have you personally faced the problem of failing to stick with your plan and following a certain method? And if that has happened, why has that happened in the past?
Yes, of course, because see what has happened, even if when we develop a system, so there are different stages of that also. Initially, it's an ideation where you have to think what kind of system is possibly working in the current context of the market. And when you develop a system, you do a lot of back testing, you understand that. And then something like March 2020 happens, where most of the systems would have gone for a toss because such an intensity of fall in short period of time was seen only in 1987 in US. So your system wouldn't have been able to capture that kind of a scenario. So in that kind of a scenario, you have two things. Either you believe that the methods that you have developed or put into the system is no longer valid now, and the market is into a different zone altogether, or you try thinking that what where you believe into the system and you then try to tweak it a bit and then continue to use that. Because after the crash of March 2020, post April 2020 onwards, the market again started stabilizing and going up. So if you would have continued to use that system, possibly that was one of scenario where you would have lost some amount of money basis of your risk and money management, and then your system would have got you back right on the track. But it is during that phase of April onwards, 2020 onwards, where the markets were again stabilizing and started slowly going up. You would have to need your belief into the system. You need to have that mindset that you are going to follow it. And these are the phases where you, even after developing algorithms, it is going to work, but you don't follow it. This is as far as an automated way is concerned. Now when you are into not an automated way of signaling, but a more discretionary, more depending on your thought process, like Elliott waves, which is more discretionary to you, then emotions becomes all the more important. That you should not be seeing a third wave at a place. When I say a third wave, which means a large move, when there is none existing, so that you are biased. So there are a lot of biases in trading psychology. If you read a few books, or if you are already a trader, you know it by experience. There is recency bias, there is gambler's fallacy. There are so many biases that actually governs every single human being. And not only for trading, as I said, these biases exist in our cells since many years or since generations onwards, like an herding behavior. So when the markets are rallying on the upside and you are not in the trend with everyone, there is a very strong emotional feeling of getting it inside the market. This is like a fear of missing out. We call it fear of missing out, or FOMO. Now, if you have that fear of missing out or FOMO, you are going to do something stupid. You are going to end up buying at a high point of the day when you are supposed to be selling at that point of the day, just because you missed the trend. So there is a lot of thought process even that has to give into system development, which requires you to be unbiased when you are developing it. Because if you are biased and you develop a system, you actually produced your own replica with all the emotions into the system. You just hard coded it.
Wow, that's interesting. Shadish, over to you.
Thanks, Yash. And uh, Ashish, I think those are literally the golden words, that you've really spelled out for our listeners. But let me just move away from the topic and focus on the mental health. We just recently did an interview, Mind Over Money, where we emphasized on the mental health of an investor or trader. So why is it important? And I believe that you also take sessions specifically around these lines, for your students. And why we say that at this point in time is because there are a lot of new investors in this industry, or you could say in the trading community, who have probably just joined after 2020 or March 2020, post the COVID outbreak. And most of them are new to the trading, but they're not aware how to control their emotions at this point in time. So how can probably meditation or other forms of techniques can really help them out to really balance the emotions. Over to you, Ashish, on that.
Yeah. So, Kshitij, this is a very deep question or point that you want to address. We have already discussed about it, and it's very important that in every aspect of life we have some form of meditative practices which is incorporated. Not only necessarily when we want to make money, it is about the experience that we develop out of whatever things that we are doing. It does not matter whether we are simply working as a trader, or we are working for ourselves, or or in media. What is important is our experience to understand those things. That is very crucial. Now, in any kind of a business, if you start a business, there is a gestation period of 6 months, 1 year, 5 years, and 10 years. But especially in case of trading, there is the gestation period is extremely less. It is instantaneous. So if you are a trader, your the outcome you will get it instantaneous, whether you made money or you lost money. So your bottom line is instantly impacted, which is not the case in case of any other businesses. And that is very, very crucial, that when things are not going the way you expect it to be going, you at that point of time you need to be careful. You need to be non-anxious, as I say again and again, use that terminology, because current generation, if you look at people, everyone wants to be a very, very big trader, but they do not understand and pay attention to their own self, which is very crucial. Now, when I we talk about meditation, people think that you have to simply try and stop the thoughts and you have to control things. It's not the case. You need to be, as far as I know, out of experience and out of learnings, it has to be not controlling anything. It has to be just aware. So, for example, as a trader, what is my weakness? That I need to be aware of. If I'm aware about my weakness, I know I'm not going to do. If next time similar situation happens, I might do it once, twice, but the third time or the fourth time, I'll try to change my behavior or my reaction to that specific situation. Only I can do that if I'm aware about it. If I'm not even aware that I'm an impulsive trader, or then I will not be able to change that situation. So I need to know for myself that what type of trader I am. Am I good with intraday, or I am a good option trader, or I want to be an investor? What many a times I have observed that people get, especially the new traders who get into the world of derivatives, they risk their entire capital in just two or three trades, and then they possibly double it or lose everything. Now, as a new trader, you can afford to do that. But as and when you mature enough and you are in the markets for some time, you know that you can't be out of the game. That's the bottom line. And if you don't can't be out of the game, what is that you are doing which is going wrong? It's not necessarily your system, it's not your method, but your reaction to the situation is what makes it worse. And for understanding that, you need to have a good mindset. Again, why meditation? Because if things does not go the way you expect it to be for once, twice, three, or five times, are you still okay with that? If you are not, and you are all over the place, you are jumping, you are shouting at your neighbors, at your wife, at your children, what is the quality of life that you are living, despite of whether you made money or lost money in trading? That is very important. So you need to be aware about these kind of things. And especially once if you are getting in as a new trader, you think that it's like a money making machine where you can double it overnight, and that's the intention with which you get in. But that is not the case. It is all about the process. You follow the process, results will happen. Now, if you look at various religious books, what has been written is renunciation of fruits. It ideally means that you keep doing the process, you keep doing the karma. What will happen is the outcome will come basis of your luck, basis of your whatever hard work that you're putting in your systems, and though that will come. But in the process, how joyful you are, that is what is important. And that is what I think is meditation all about.
Absolutely. In fact, win or lose, I think being joyous at the end of the day, that's what matters the most, because you have to come back the next day as well. And at the same time, you're not alone. You are with your family, you are with the loved ones, and we have to give them the required respect in every point in time. In fact, the one takeaway from this conversation at this point in time for everyone is that being aware, quote unquote, is something which is very important for everyone. Now, another thing which I want to probably put it across to you is that how do you keep yourself mentally fit? Now, is there any meditation or yoga that you sort of recommend to your students? And in fact, you've trained more than 10,000 students. Any example or anything which comes to your mind from a student or something like that, in your one of your trading sessions?
Yes, of course. So when during our mentorship program, it's very important that when you are mentoring and trying to create traders, it has to be development from across. It need not be only from the perspective of forming a system or forming a method. It has to be an overall development. And one of the simplest way that I find across, which is also easy for everyone to follow, is to be aware about breath. Now, something like that, which is a very natural phenomenon, subconsciously, we are here as we are aware, we are conscious, right? Even subconsciously, we are breathing. Now, breath is something which is the most essential aspect of life. It is because of every breath that we take that we exist here and we are able to experience whatever is happening around us. If there is no breath, if the breath is taken away, what we call as ourself and what we call as our body will fall apart. So that is the case. That is the holding thread for every one of us. And what we actually try and do in this program of mentorship also is making people aware, at least for some time, to be aware about the breath. So we don't really have to do it. What happens if I ask someone to be aware about breath, he start doing breath. You can't really do it. It's anyways happening whether you want it or you don't want it. Breath will happen. That's how the life will continue. So when you are aware, so awareness is also there. So it's the only question of aligning your awareness to the breath. That's the only thing that matters. What happens is because of our daily activity, because of the trades that we did in the during throughout the day, or all of those things, we get lost in our minds, and we keep and you might also realize that you have been overthinking about things which is not significant, or maybe you are making it significant in your mind, but existentially nothing has changed. Everything is the way it is supposed to be. Because of your only thinking, which might be on a wrong track, it's not going to change. So be in the moment is what we also say. The only way you can bring yourself into the moment is by practicing of being aware about the breath. So again, as I'm repeating, it's not about doing the breath. It's not about trying, okay, I will breathe in and I'll breathe out. No, it's not you. Try and think. You are not even the major role play in your own life. The breath is anyways happening. You don't really have to do it. So just being aware about it will calm down you to a lot of extent, will try to make you come to the moment which is right now. And that is, I think, is the most simplest way of meditation. Just be aware about the breath. That's how we do it. And that's how there are many other forms of yoga also which you can practice, which can give you a lot of ability to be strong, because if you are physically fit, that is also very important. I have realized that if you are not physically fit, you are not able to sit at a place for more than 15 minutes, and you have to get up because of some pain, it will distract you from whatever activity you are doing. So you need to be physically fit. If you are physically fit, your mental condition will automatically improve. And once your mental condition is improving by being physically fit, you will be able to sit at a place, being aware about the breath, and then you will realize that whatever was going on in your mind was simply making no sense. And you will be simply amazed to see that how stupid you can be. So with all due respect, when I meditate, I'm just aware about the thoughts that are going on and aware about the breath. I just realized that the mind is like a animal which is going all over the place and not making any sense. It just connects from one point to the other, from that point to the next, and it's just jumping. And if you are aware about that, we know that this is not the reality. So it helps us to be in the reality. It helps us to be taking a good, correct trading decisions that we want to take, and it helps us to be mentally fit.
Well said, Ashish. I think there's one thing uh, that needs some emphasis is that being mentally and physically fit, that is what is required for for your life as well, and why it is required for a trader is because if you are mentally stable, then you're able to take those split second kind of decisions, because in trading it is all about reacting, reacting, or more or less responding to a situation. So ideally, what we say, don't react but respond to a situation. So don't take don't take decisions in haste, but respond to it, analyze it, what needs to be done. But that can only happen once you have a stable mind. Why it is, for us as well, it is something that we have to bring it into the open, that mentally fit has become the most important thing, especially at a time when there could be a possibility of a personal loss, and the COVID situation is also happening, probably in the past 1 year or 2 years. So mentally fit becomes your number one priority, so that even if you are an entry level trader, or even if you are an experienced one, but if you're able to control your mind, if you're able to control your thoughts, you will be able to focus on the decision that needs to be taken. So I think over to you, Yash, for taking the discussion forward.
Yeah, thanks so much for that, Kshitij. Ashish, I want to talk to you about the current crop of investors who've, entered the markets in the last 2 years. These new age fintech companies have really democratized the markets. But do you think that at the same time that social media has an impact on these young investors in the way that they perceive stocks and investment?
Yes, of course. I call them as Robin Hood investors or traders, right? That's a new word that has given in the US, how much you can trade, and the brokerage is zero. So it's social media is playing a very, very vital role in terms of both constructive and destructive, I would say. So because of the social media, the plethora of information is so much that people who are seeking genuinely how to go about trading, how to go about learning the entire science of it, they are confused whom to follow, what information to rely on, what not to rely on. So that's where if they fall into someone who is just trying to make money out of you, you might end up losing a lot of money. So social media plays a very vital role, but it should be used with very utmost caution, because if you look at Twitter, for example, we are right now on Twitter. The only amount of the expression that you can give is to the extent of the limitation of words that you can put in there, and that has to be interpreted in the right sense, if and the right context. So uh, if you interpret it incorrectly, you will end up losing money. And for trading, that is very important, because it's not, if you check Twitter and the social media places, none of the blueprints for the entire business model is being shared across on Twitter. But for trading, every single person is doing that without any credibility that you might have evaluated. And the other problem is, if you have a followers, large number of followers, you assume that that person is talking sense, and that is going to be the way you are going to trade. But that might not be necessary. So social media plays a very vital role. I think ET markets and stock tweets, what you people are doing is fantastic to spread that awareness in the right direction, a right approach, how to be looked at, and how to go about it is very important. This is where media and social media can combine together to form a platform of genuine. We want to create a world of genuine traders. We want to create someone who is genuinely seeking to become good with this science, knows about it, and learns it in the right way. Otherwise, he will leave it in a bad taste, despite of him having all the skills that is required to become a good trader.
Awesome. Ashish, also, I want to know from you that, have the fundamentals of trading changed from, say, 30 years ago to now? given the kind of connectivity that we have nowadays, trading has become so easy. All you need is just one app on your phone. The definition of what is long term has also changed with asset classes like crypto giving you 100 200% return in a matter of few days as well. So have the fundamentals of trading changed as well?
Yes, of course. So what I say is that uh, the reaction time has come down drastically. So earlier, the information that you would used to get maybe delayed by a day, then you have some time to think about it, and then you act on that. Right now, the reaction time is fraction of a second. It is so fast that your execution has to be very, very quick. And as you rightly pointed out, there have been cryptos, there have been, in fact, certain stocks that have given you 100% return or 1000% return in a very short span of time. But the problem happens is when we start searching for a stock that will give us 1000% return in a year or maybe less, do not search for it, because what is important is on what basis can you find out those kind of stocks out of say 4000, 5000 stocks that are tradable. That can be a very, very less universe. I'm not saying you can't identify that. You can still do that. You can make a lot of money, but you should be focusing on the process. Because of the technology, the way you can trade on the go in whichever part of the world you are, you can simply go there and put in an order, and it hardly takes a second to just buy or sell something. You might not be doing it very, very after giving a lot of thought. You might not be doing it. You might be simply compulsive trading is what we call it. Compulsive trading means that you are just buying or selling it because you have to. There is nothing else that you can possibly think of doing. You think this is going to give me the adrenaline rush, you are going to be thrilled, and that's why you are doing it. Then there is a problem, because on social media, if you search for any specific tickers, you will see thousands of comments on that, diverse views on that, and a lot of information. Now, you are going to pick up that information which is suiting your bias. Now, that's a very important point I'm trying to make it here. Suppose if you are bullish on the market and you are searching on social media what is happening around, you will try to read the news that satisfies your bullishness. Now, there might be news which is bearish also, but you will try to ignore that. That is a bias. We search for the news or the events which justifies our stand. We reject the ones that does not justify. Now, for that, you need to be aware that what you are doing is out of sheer biasness and not because of your method or systems or things like that. So social media, technology, both have definitely changed the way it is functioning. If you look at past 1 year or 9 months of data in India, it is the retail investors there who have been buying and buying. Look at the FIS data. They have been the net sellers like anything. I think it even dwarfs the 2008 selling which happened, which means it is this market right now is driven by majority by retailers. Now that's a plus because then we are increasing the depth of the market. But at the other hand, do retailers have the correct information, the in-depth knowledge and understanding and guidance basis of which are they buying it? Then it is okay. But if they are simply buying because they want to buy, someone else is making money, then there is a problem. Because if the market continues to correct, they will be left with a lot of pain since they had no money management or risk management strategies in place. They need to know that how to get out of the market also. It's not about always getting in. I think you can get in at any point of time. The question is when to get out and take your profits. That is also very important, that very less number of people addresses.
Should.
Thanks, Yash. In fact, you've highlighted very interesting topic about retail investors, Ashish. Now, let me give some anecdotal evidence here. So,
Okay, fantastic.
I was just searching about multi-bagger. So everybody's looking for 1000% kind of a return stock. So the data suggests that we sort of peaked out that multi-bagger thing back in January 22. So that was the time when there was a maximum interest on multi-bagger stocks, and then over the period of time it has sort of come down. So we are at a stage where it is probably, if you look at RSI, then we are taking we are at the 30%, so pretty near the oversold levels at this point in time. So it could actually bounce back anytime soon, but yeah, hopefully it stays at level. So people ideally should sort of search for the trading techniques and not for multi-bagger stocks. I think that would be a very good this thing to continue. Now, talking about retail investors. Now, if you look at the portfolio, Ashish, most of the investor portfolio might be running in the red after the recent correction that we've seen. If you look from, let's say, from October to now, so we've seen a double digit kind of a correction, although we have sort of covered some of the lost ground. But then again, still, most of the portfolios might be in red or probably in a single digit kind of a return as compared to, let's say, before February or onward January. So some people do push the exit button at this point in time. Now this has been historically speaking, and some withdraw the money, as we saw in the last month SIP flows. So while just so some investors just stay put and get into depression as well. Now why we say that is because we've seen some of these examples coming out. In fact, this is based on few of interaction which I had. So, investor portfolio, it could be, good amount of portfolio, could be 50 to one CR kind of a portfolio. But then again, if in case, especially the mutual fund portfolio, if in case they run into losses, then they don't know what to do, and the fear grips them, and that's why they get into a depression kind of scenarios. So have you also come across these scenarios when you are interacting with clients, or when you're interacting with fellow students who have invested and then they've also faced with similar scenarios?
Yeah. That's a very, very amazing point that you raised, Kshitij, is when the markets are on a high, I would say, then everyone is an investor or a trader and in the market. But when the market cycle reverses, they look at it from the perspective that since the market cycle has now reversed, they wanted to get out at a specific point, but they never did because of greed, because of emotions that gripped them. They never got out of the market. And once it starts correcting even 10%, if you see a correction on index, 10% is not even qualified as a bear market. We need a 20% correction to call it a bear market. But once it starts correcting even 10%, these there are a lot of investors who have never seen markets before. They don't know how it behaves. They don't know what type of animal it is. If they have been the ones who have been looking at fixed deposits, or they are the ones who have been looking at returns from the bonds or debt market, they would like markets to behave in that way, but with a very big on the upside, but not on the downside. Now, when that situation arises and you're not ready for that, when you see a correction in your portfolio by 20%, 30%, you start getting panicked. You fear, and you don't know what to do next. You don't know whether it's going to come up or not. That is exactly what happened in March 2020, just prior to the sell-off that we saw, a very severe sell-off. I came across so many of my clients, despite of me saying them that March end, by the end of March, this is the time where you have to start buying the market, not selling it off. They were of the view, no, everything is over. Don't you know that there is COVID? Economy is going to go into stress. There is going to be recession. There is going to be Great Depression. Rather than doing that, let me sell out a market at around 8,000, 9,000 Nifty levels rather than buying now, and you are stupid. Now, that's what they say because their emotion is so strong. They will reject any kind of thesis, any kind of possibilities that you are trying to suggest them, which goes against the logical thinking of the mind. So mind functions in very, very unique ways in case of panic, in case of fear. A very classic example can also be, you know that if there is a fire in the building, you shouldn't take a lift going down. That is a common sense and everyone is aware about it. But go and check the statistics. So many people die because they are stuck in the lift when there is a fire outbreak. This is how the mind functions when the market collapses. It's panic that is a very strong emotion, and people react. They do not just act. They react to the situation in the ways which is contradictory to the way they should be. So they might have ended up buying prior to the crash near the top, which is buy at the high and sell at the lows. That is what they're doing instead of buying at the lows and selling at the highs. And not only for investment in the stocks that they did, even for their mutual fund holdings. Trust me, once you see the market, if market corrects another 10% from here on, you will start getting the figures that redemption has started in mutual fund 10 or 15% lower from here on. People start redeeming. But that is the time period, if you believe in India growth story, that's the time period when you should start pumping in money. And that is what makes a huge difference between someone who is buying the lows and someone who is trying to sell the lows. And that is very, very important to understand this panic situation. Now, why does this arise? Because you do not have a method and you do not know what is the right thing. Markets are uncertain and we are trying to look for certainty here, which is never going to happen. You have to accept the fact that this is all about probability. This is all about uncertainty. Are you okay with this uncertain situation? Markets will eventually go up. Eventually, your average CAGR might be around 12-15%. But that's an average CAGR we are talking about. Post 2008, Nifty rallied by nearly 120% on the upside. After that, for 3 years, it did not do anything. Post March 2020, index rallied by nearly 140% in just one and a half years of time. Now we are not doing anything for next 2 years. It's how it's looking like. So on an average, the return is going to be again to the extent of 12-15% CAGR. You can generate alpha by trying to buy more when you think the markets are going to reverse and it's falling. You can time it to the extent. Yes, because I do study on a lot of study. I've done more than a decade of study on timing the markets. Whereas you have learned from majority of the people talking about never time the market. But if there is a science that exists, then why not learn it and try and do that? So what I'm trying to say is whether it is timing the market, whether you do it in an SIP mode, whether you do it just as an investment for you're investing for passion or you're investing for thrill, you need to have a method, you need to have a strategy, and you need to be prepared for worse. What's the worst that can happen and how are you going to behave in that situation? Do not leave it for future again, like if it happens, we will see. No, this is a business. You have to be prepared for it. If it happens, what is plan B? If you have plan B, then you can survive and you will do the right thing. If you don't have plan B, then you will end up buying at the highs and selling at the lows.
Right. Having a strategy, that is the most crucial thing. Now, let me also connect. The next question is, how to cope up from a failed day. We've talked so much about retail investors. We've talked so much about timing the market, having systems in place. But we all know that things go the other way, uh, and it usually happens. So even if you are a newcomer, or even if you're a new investor, you are an experienced one. I'm sure it might just happen with you as well. So you are able to control your emotions. But let's say for an average investor who is not able to control his or her emotions, how to cope up from a failed day when every trade went sort of against you? How do you get up and prepare for the next morning? I think that is something which probably, if you can give these investors an insight as to how to really prepare them, because the last day, let's say it gave them a bashing from every nook and corner, whether they opted for a derivative strategy or an option strategy, or in the F&O market or cash market, everything just didn't work out.
Sure, Kshitij, that's a brilliant point raised. And I would say that it does not matter whether you are just a new trader or you are a trader with 40 years of experience. It happens with every one of us. So it's not you. So one thing that I want to tell every single one who is listening to this, you are not alone. Every single one of us are in the same boat. Because try and understand what we are trying to do here is we are trying to make money out of whatever we are doing as trading. That's the ultimate outcome of what we are trying to do. If you are trying to make money out of it, but if you lose, you are going to be having that pain. It does not matter even when we meditate, we know that we should accept it. That's the fact. But we are not at that place yet where we can simply accept the plus and the minus in equal proportion. That's how the mind is. So if that would have been the case, I would have possibly left trading, because then there is no thrill in that. So you have to understand that this is how it is going to be. This is the fact of life. This is the fact of trading. You have to accept it. That's one. And this happens, this is not something which will happen once a while. This will happen very frequently. Maybe every day. It can happen with you in a month. It can happen consecutive 10 days when you just keep trying. It did not work out. Or it can happen maybe 10 times in a year. So don't try to be numbering that, okay, this is my phase of bad luck. I'm in a phase, I should go to a Jyotish and try to change. No, don't try to do that. Then you are going into a much bigger mess. What I'm trying to tell you is that it happens with me. So what I do, I'll share across. I don't know what is right way of doing it. This is out of experience. So how I do it. So I go back when there is a bad day or a bad month. I go back, sit in front of my computer at one screen. I don't have multiple screens like people having 10 screens or 5 screens. I don't know how to cope with that much of information. I just go and sit in front of the screen. I open up the chart, basis of which that decision was taken. And then I try to see, was it something I could have done about it? Was it as per my method, which I derived, which I have been developing? And as per that, is the strategy correct? If yes, fantastic. If no, then I need to tweak it, change it a bit, and try to see how I can be a better trader if a similar situation arises. That is the only thing that you can do with the process. You just go back, open up your chart, and see, was you doing anything stupid, or was it your own research methods that didn't work out this time? Once you have that, prepare a statistics of past 1 year, 2 years, 1 month, 6 months, and see how many times that kind of a situation arose and how many times it did not work. When it did not work, now this is very important. When that did not work, did you follow your risk management, which is placing a stop loss, getting out, losing less, and money management, ensuring you did not bet your entire house on that specific trade? These two are going to make you come back in the game. So if you have a capital of 10 lakh, you lost 3% of it. Come back with that less capital. Again, bet say 3% of your revised capital again on that. 3%, keep doing that. If you do not want to go fancy, simply follow a rule of 3% or 5% maximum. Today, I'm going to risk 5% of my whatever I'm going to trade. I'm not going to lose more than 5% of that. Keep doing that. You will realize that the losses will keep getting smaller because your capital will keep reducing, and so your losses will keep getting smaller, and you will never be out of the game even if you keep losing for 10 consecutive times. Because the next time when you are winning, you need to ensure, when you lost 3%, when you win, you mean 5%, 6%, 10%, or 15%. So whatever methods you have, you need to ensure that your loss is minimized to the extent of your risk reward. So what we call as a risk reward is, when you lose 3%, when you gain 6% or 10%. That is very, very crucial. And you are not risking your entire capital. You are risking only 3 or 5% of your entire capital. Now, that is also relative. It can't be generalized for every single trader, because some traders can be very aggressive, some traders can be conservative. So for conservative traders, you might not want to risk more than 2% of your capital. That is when your introspection comes into play. And this is very important. We also do it in our mentorship program. Introspect. Try to identify yourself. I advise people not to try to mimic or copy other traders, because you don't know what is in his mind. He is okay losing a lakh of rupees a day or 10 lakh a day. But are you okay losing that much, or 5,000 or 1,000 in a day? You have to decide for yourself what is that you are comfortable if you lose. What is that which will still allow you to sleep well if you lose? That is your figure. That is very relative. It can't be decided by anyone else. That has to be decided by you. If you lose your night sleep because you have betted a lot of money in the market, you know you have done a mistake and you are gambling now. So rectify your mistake the next day, reduce your position size so that you are at ease. You have to trade. You have to treat trading with an ease, with an easy to go way of looking at things, and not just for that thrilling experience. In a way, if I can be blunt, trading should be boring. If you excites you every day a lot, which means you are risking a lot. That is one of the very easiest way to identify. So someone who is having 10 lakh of portfolio losing 10,000, he might be like, no big deal. But if you keep gaining that much amount,
Right.
slowly, steadily, you will add up a lot of money. Yes.
Right, Ashish. As you said, that you're not alone, and having system in place, whether it could be a 3% or a 5% rule, that would really help. Now, over to you, Yash, to take the discussion forward. There.
Thanks, Kshitij. Ashish, that was a very elaborate answer to Kshitij's question, but I just have one more thing to add. The way you described the whole situation, you make it sound as if everyone can trade. But there are thousands of people teaching you investing and trading on the internet. But with the point of this Spaces session is that clearly it is not a science; it is also an art. So, at
Right.
what point, and hopefully without blowing up your multiple demat accounts, would an individual realize that they are not made for trading? Or are you saying that trading is meant for everyone, you just learn over a period of time, you rectify your mistakes? Because there is a very damning stat that says 90% of the traders are not profitable. So at what point do you say that, boss, this is not for me, and instead of buying a penny stock at 100 rupees, waiting for it to become a multi-bagger and then averaging it down your entire life, is this just a myth, or is it actually physically possible for you to say, boss, I'm not meant for trading and I need to quit?
That's a very interesting point that you raised, Yash. So I would say that traders are not born. Traders can be made. That is what I believe. So if it can be made, you can be mold. You can mold yourself. You can do a lot of things. It is possible. So it's again like meditation, right? When we are a child, we can simply, we are meditative. We are not thinking. We are not out of our. We are actually simply doing what is required in that situation and enjoying every bit of it. It's only that we grown up that we realize start giving too much importance to our mind. So I would say that it's very important that you understand traders can be made. They are not born. That is for sure. That is what I can commit. But when do you quit? I say you should never quit. If this is something, as long as you are disciplined enough to ensure that you are never going to sell off your home and buy a stock, you can do trading. And you never know, it might take a month, it might take a day for you to realize that you have to be disciplined, or it might take years for you to get there. But you can get there, is what I believe is possible. The
But
question then arises. Yes, please.
but Ashish, isn't this in a way a form of confirmation bias that, okay, you have your risk management in place, you have a system in place, and instead of blowing up 10 rupees on one trade, you lose 1 rupee on 10 trades. But there has to be some logic, or or you just wait for the inner voice to tell you कि भाई बस हो गया अब बंद कर दो.
So, so see, I would say you need statistics, to be honest. So I'm the guy. I'm an engineer. I'm from the science background, and I believe into stats. So what I would say is that I don't want you to keep doing it for 40 years and trying to run like it's some kind of a mirage where people are searching for treasure where none exists. It's not the case. If you go back and check if you read the books, you will see that so many of the traders, they have a history of where they lost for 10, 15 years, but then they made it. So it is something that you need to think for yourself and introspect. Are you really meant for it? Are you really passionate about it? Are you going to enjoy it if you do it for the next 50 years? If you are going to be talking to yourself and saying, yeah, I'm going to be in a lot of pain for next 30 years, 20 years, or even 1 year, then why not quit now? So don't be addicted to it. I would say you need to maintain your distance. That is important. When I say you should never quit, does not mean that you keep risking and buying it like a lottery ticket and keep doing it every day until one day there is a lottery. No, you don't have to do that. You need to go back, check what did not work, and improvise. That is what it takes. You need to go back, check, change, improvise. Keep doing that exercise and see if you are moving forward anywhere else. That's how I did it. When I started a long back, and in 2008, I keep coming back to that because my life changed in 2008. I lost my job. There was nothing else to do, and this is trading was something that I was passionate about even then. That's when I did my CMT also. So it's about learning, learning, and learning. The learning never stops. If the learning never stops, if you are not meant for trading, you can at least be investing for yourself. I tell people why you have to rely on anyone else for your investment decision. Which funds to select, even if you are parking money in mutual funds, you should know how to select a good one for you. You should know when to exit from that. So, trading is not only about an intraday trading or about buying now and selling after a few days like a swing trading. You can be a very intelligent investor. There can be a lot of ways to approach this market, and you can still create alpha. You might not know, by simply buying and sitting on the right kind of stocks, you might have made a lot more money than by trading. So, what I'm saying when I'm talking about never quit is from the perspective that if you know your statistics suggest that over a period of 6 months you gave it a shot, it's not working. Did you change your style? Did you learn from it and became more disciplined? Are you moving forward? Are you more joyful doing it? If not, then you have to think, pause and think, let's not do this trading. Maybe let me give it a shot on the investments that I'm trying to make. If you are still not learning, then possibly it's not for you. You should quit.
Perhaps, in a way it is like how it is for sportsmen, right? Except in that case you don't have a straight away result showing in the form of MTM every day. You're taking small steps, you're improving, changing your habits, your food, training. Similarly, working on your mistakes, keeping probably a journal and avoiding making those same mistakes, adjusting your style like you said, and taking small steps and improving. It's just that in this case it's just right up there in your face. If you've done something wrong, if it's just not your day, something happened globally, you Dow futures are down and you are long, and next thing you're staring at a big red day.
It's a very important point that you made right now. Majority of the people lose their overnight sleep, not because they lost money today, because their anticipation they are going to lose tomorrow because the Dow futures or SGX Nifty is negative right now and you are long. That is what causes them the most misery. One very important thing that I would also like to point out is that we humans, we are fearful of something which has not happened. But if you are in the situation which is happening right now, your fear will come down drastically. Similar thing happened with pandemic. When there was no lockdown announced, we are fearing. Finally, the lockdown is announced. That's the worst. What will happen next? So that is how it is. So don't lose your overnight sleep because SGX Nifty or Dow Jones is down. How are you going to exit your position systematically, and what is your method, how you are going to reduce the collateral damage which is going to happen, is what you should be thinking about. Not that I'm going to lose so much, I'm this, I'm that, and you don't kill yourself for that. You did it, it's fine. Basis of something, learn from it, get up in the morning, it's a fresh day, a fresh start. Who knows, you can make it big today.
Interesting. Kshitij, over to you.
Optimistic words there from Ashish, and don't lose your sleep, and hashtag be disciplined. That is the golden words coming from you. Now, I think lastly, probably I want to ask you, what is the rule book for traders which they should actually follow on daily basis? Any 5 to 10 commandments you would like to recommend?
Um, Again, that's a very challenging question because every trader will have its own way of looking at things and own rule book. For me, the most important thing that I have in the back of the mind, I have written this down long back, but since it's ingrained in me, I don't really have to write down anything more. So it's, first of all, whatever you did or traded today, was it on the basis of some logical study that you derived that? Maybe it be fundamental, may it be technical, may it be time, may it be anything. Are you deriving your trade basis of that? Next is, are you disciplined enough? It's very important. You will not believe, when I was with Lehman Brothers and I was in US for some time, they hired for a trader, they hired someone from the Navy. And I was surprised to see that why we are hiring someone from a Navy for trading. And the answer is because he is the guy who is going to be most disciplined and follow the orders, which is required for a good trader. So that is very, very important. And that just hit me hard. And I realized how important you to be following your own system and your orders. It's made by you, it's not by anyone else, but you need to follow that. That is important. So are you disciplined enough? Next is the rule. In the rule book, you should have, what is your risk management? Okay, never risk more than what you can afford losing. That is very important. Are you okay with losing that much? Is it okay? Put an amount aside for trading out of whatever corpus you might have. Put a specific amount aside for trading. And are you okay losing that much amount? So that can be one more way of looking at things, and then you can decide that, okay, it's not for you, you want to get out now, because you defined an amount and you have lost everything now. But if you have not and you are still making it happen, then you should continue. So are you okay losing is what the third point can be. Very, very crucial. Fourth is, what is the edge? There are thousands of traders who are sitting right in front of the screen and doing things. Now, you are the guy who is going for a job throughout the day, and at the end of the day, you look at a market for 5 minutes and you decide what to do. You can do that. I'm not denying that. But you are betting against the people, thousands of them, who are right in front of the screen for you when you are not there. So, what is your edge? How do you differentiate yourself from everyone else? That is again an important. So, define your edge. It can be anything. It can be any method. Do not just try to say this works, that does not work. What I have also found that majority of the people waste their energy in talking and debating about fundamental is not working, technical is not working, Elliott wave does not work, time does not work, this and that. I said, stop the debate. Your intention is to win the game, not the debate. So use the method that helps you to win the game. It can be anything that works for you. Use that. And that is the very important point. What is working for you, you need to identify and use that method. The next point that is there, if prepare a complete statistics of your trade, you will be surprised to see that the way your profitability goes up and down is also patterned. When I say pattern, it moves in the form of Elliott wave, which means that you will realize that it goes up in a specific way, then corrects down by 3 ways, and then goes up by again in a 5 waves. If that is the case, you can continue to trade. But if you correct down in 5 ways and goes up in 3 ways, then there is a problem. So you need to have statistics. If you are just starting, maintain a book. I'm surprised to see so many of the traders who start trading for a year, 2 years, 3 years, they traded, but they have no clue how much they made on their capital. So how can you even trade if you don't know whether you're making or losing money? Which means you are simply playing a game. It's better to go to a casino then. So prepare a statistics, complete statistics of your trades, the reasoning, the method that you followed, what didn't work, what worked also. So that can be the 6th point that you have to maintain. Very crucial. The next point that you have to ensure is the right mindset. Do meditate if possible, whatever methods you can use. You can use something from Sadhguru Isha Foundation. You can use from Sri Sri Ravi Shankar. There are so many of them, and those are brilliant things to do. But the problem is we don't want to focus on anything. We just want to catch something and leave it. Don't leave it. Continue to do that. That's again an important thing. The final and the most important thing is go and do things that you enjoy doing apart from markets. Because what will happen, you get entangled. We are doing trading, which is most important way, which is the place where you get entangled very easily, because the MTM is daily. So you need to de-stress yourself. Go and do something that will de-stress yourself. That is very important. Identify that activity which will de-stress you, so that you know this is just a part of life and this is not the life. That is very important. That's the 8 point commandments, I would say, that you should follow, that I follow. I don't know what you should follow, but I think these are important for me.
Absolutely, Ashish. In fact, these 8 commandments, I hope our listeners are, making a note of that. And beautiful, the last commandment is, I also second the same, because, you know, being able to do what you like, which makes you happy, it could be as simple as reading a book, going for a walk, do a jog at the end of the day. I think that is something which will really enrich and refresh your mind at the end of the day. So you are back again for another fighting day the next day. Over to you, Yash.
That was great, Ashish. We'll just quickly open the floor to any of the questions from the audience if they have for you, Ashish.
Sure.
Guys, if you have any questions, feel free to hit us up and we'll give you the speaker access. And in the meantime, Ashish, till we get all the questions from the audiences, do you want to give us a quick take on the markets? The last couple of days have been slightly on the slower side. What's
Yeah.
happening?
Yes, absolutely. I'm sure many of the listeners are here just to understand कि यार ज्ञान बहुत हो गया, but ultimately कल करना क्या है? Buy or sell. So that's the point. So the way I'm seeing the markets, I think the markets right now is, to be honest, 18,600. When the market was around 18,400, I called for a top in the market, which was even 6 months prior. I gave the date that by October 2021, the markets will top out. And that worked out brilliantly well. I think over the short term, so there are two views. Whenever I give views, I explain them from a short term to a longer term perspective. The way I'm seeing that the overall market is, we are in a bear market, which started at 18,600. It's already 6 months old, and more 6 months to go, or a year to go. So by June 2023, we will start seeing the best of the trend on the upside will come by June 2023. Having said that, it does not mean that if you are in a bear market, you never buy, you always sell. No. Right now, I think the low which is formed around 15,900 might remain intact for coming weeks. And for next 2 weeks, use dips to get into the market. That's the opportunity. We might be headed towards that 17,000 psychological level. Maybe we might cross that as long as 15,900 is intact. So I'm going to use dips to go long in the market, but with a very strict stop loss, because since the overall broader trend, the broader context is bearish, we might not be able to make a lot of money in a short span of time on the long side, but we can make on the short side. In a nutshell, over near term, looking for a buying opportunity. If tomorrow Nifty breaks back above that 16,680 mark, we might go towards 16,900. That's what I'm looking at. On the downside, the near-term support for the market is 16,400. Near-term support, this is for a short-term trader. And 15,900 is my ultimate support. If that goes, then I'm all bearish.
All right, so that's the view coming in on markets from Ashish. I guess we don't have any questions from the listeners, so we will wrap it over here, Shatish.
Absolutely. I think you've kept the best for the last, huh? Golden words coming from Ashish, where the top is, where you're going to go bearish. So, yes, I think it was a very insightful conversation to me and all our listeners as well. And I hope they've made the notes, the brilliant commandments which Ashish highlighted. And, the last commandment, I just love it because, you have to do things which makes you happy. That is beautifully written and said by Ashish. So yeah.
And guys, in case you have missed the Spaces session or you joined late, it will be the first pin post at the top. So we highly recommend you go back and listen to Ashish's take, as well as on the markets and trading psychology. And just a small FYI, we do these Spaces sessions every Wednesday. So if you're new, do not forget to follow us on Twitter and sign up to our daily RIP newsletter to stay up to date with the markets. This is your host, Yash Upadhyay, signing off. Invest safe and peace.